Hi everyone, welcome back to the channel. So today I want to talk about loans. See, very often, right, we heard that people say, hey, car loan only 3% ma. Why not you just, take full years, 9 years? Personal loan is only 3% ma, it's only 4% ma, it's very late, very less ma. Put FD also, we earn more than that, right? Now actually, I want to change your mindset a bit. Car loan and FD calculation is actually very different. Car loans and personal loans, they usually go with flat interest rate, whereas in fixed deposit we usually see is the effective interest rate. So I'll just give you a brief overview on what is this flat and effective interest rate. So make sure you stick right to the end of the content. So first of all, we're going to need to understand what is effective interest rate. So effective interest rate is the rate that has taken into the effects of compounding. We call it as compound interest. Whereas flat rate, they just take is actually they charge you the interest based on the amount that you loan, straight flat. Okay, so we want to compare these two, right? It's actually very hard to compare because of the different methods in calculation. Because compound interest, we actually compound every year to see the interest rate that is given. Okay, so let's just give you an example so that you guys can understand clearly. Let's say you borrow a 50,000 loan, 50,000 ringgit loan, car loan lah. Okay, the tenure is 9 years, the interest rate is 3%. So the total payment you will pay is 63,500. So how do I get this? It's actually, you see, let me show you in the calculator right here. So 50,000 you times 0.03, which is 3%. So they will charge you 1,005 ringgit every year for 9 years. Okay, so 13,500 plus 50,000. So this will be the total amount that you pay. So now the question comes in: the 13,500, what is the EIR? Because we want to compare it with fixed deposit, ma. Because fixed deposit, they quote you the rate, right? It's usually an effective interest rate because that has an annual returns, and then you can use that returns to compound it for the next year. So a proper comparison, we should compare the effective interest rate of each and every investment. So back to the calculator here. So you see this website is actually provided by Loan Street. Full credit to them. Link will be in the description down below, so you guys can test it out for yourself as well. So you see the total payment of 63,500 ringgit is actually equivalent to 5.50% effective interest rate. So you see, in order to make this 13,500 ringgit, right, every year you need to put in an investment that generates more than 5.5% returns. Every year you need to generate put the money into an investment that generates more than 5.5%. Then only you can say that, oh, you're actually making money off this loan. So that's one thing very we have to be very cautious when taking up loan. That's one of the reason. Okay, and of course personal loan, all these, their interest will be higher. So a rough calculation for you guys, right, when you guys are having car loans, taking up car loans or personal loans in outside, right, I don't encourage you guys to take personal loan, but let's say you need a car loan, okay, let's say they quote you 3%. A rough idea is just to multiply this effective interest rate by 2. I mean, multiply the interest rate by 2. So let's say 3%, right? You just roughly in your head, you calculate as times 2 is 6%. So you know that, oh, the EIR is actually around 6%, which in this case is 5%. Okay, so it will be the same if you minimize the years, roughly the same. Of course, you're taking lesser years. So that's one thing to take note when you guys, are thinking to sign up of a loan, and then you say that, oh, it doesn't mean 3% is low, it's actually 5.64% or 5.5% of effective interest rate. So it's roughly double up of your interest rate that you're going to take. Keep that in mind. I wouldn't say that you're definitely making money off of loans unless you have a guaranteed investment that returns more than 5.64%. Yeah, so actually that's all I want to say for today. I hope you guys think twice before you take on a car loan, or if can minimize your loan amount, because at the end we are paying extra cash to the banks. Okay, yeah, so keep that in mind. That's all I want to say today. And down there is a lot of info for you guys to read through about what is flat interest rate, what is effective interest rate, so you guys can see the example, to understand the difference as well. And then you guys can have a better understanding on how to compare loans and investments. So I'll link this in the description down below, along with my other referral codes that I use to park my emergency funds. So if you're interested, do check out in the description. And also, if I hit 1,000 subscribers, I will also do a portfolio review. So make sure to leave a comment down below and let me know if you guys have any questions. As always, don't forget to like and subscribe, and I'll see you next time.